Hey guys, this is Pedro here, and today I come to you to show you the strategy that I use to trade Dow Jones, or US30 as some brokers call it. And this time I'm going to show you how I trade this using the 5-minute time frame. You know that most of the times I use the 2-minute time frame, which is my favorite time frame, but the strategy that I use to trade can also be used on the 5-minute time frame, and this is what I'm going to show you today. So guys, this is a chart of the US30 or Dow Jones, and this is the 5-minute time frame. You can see the 5-minute time frame here. And why did I choose the 5-minute time frame? Because US indices like Dow Jones, like S&P 500, they tend to gain more volatility when the US market opens. And we are still around half an hour, 30 minutes from the US market open. So during the morning of the London session, they tend to move slower, and when the markets are moving slower, the lower time frames tend to be messy, tend to be less accurate, and we don't understand very much what the price is doing. So that's why when the price is messy, when the price is slow, I may go to the 5-minute time frame. And I have a lot of you guys that ask me if the strategy can be used on the 5-minute, because a lot of you use platforms that don't have the 2-minute time frame. So let's look at how does it look when we are trading the 5-minute time frame. And this is how I trade this, guys. Let me just increase the zoom here a little bit so that we can see it better. So let's look at where the trends start. The best trends start when the moving averages are very close to each other. We have the 200 moving average that I use. I have the 20 moving average, which is this one here, and I have the 8 moving average, which is this dotted line here. And what I do is I wait for pullbacks to one of these moving averages, to the 8 or to the 20 moving average, and then I try to catch a leg that breaks the previous low. So you can see here that the price was ranging, jumping above the 200 moving average, which acts as a support. And then we have an ignition, we have a big green candle that ignited the price to the upside. And you can also see that the price followed this ignition candle. And this is the start of an uptrend. And what do I do when I see the price starting an uptrend? I wait for pullbacks to the moving averages to open some buy trades and then get out at new highs. So where was the first good opportunity to buy here? The price came down, it actually broke this 8 moving average, but then we have another ignition here, another big green candle. And this could be a good opportunity to trade and to enter to catch a move to the upside. The price didn't go immediately, and it actually made another pullback holding on the 8 moving average, and the break of this candle here, this pin bar candle here, is another entry to catch a move to the upside. So this could be an entry for me. I would hit my buy button here, and then I would wait for the price to break the previous high and try to catch the movement to the upside. Try to close my trade somewhere above this previous high. And then I just repeat this again and again. So you can see that the price kept going up, and here it made a pullback. It broke again this 8 moving average. And then we have a strong green candle. And the break of this inverted pin bar, it's also an entry for me. For me, it doesn't matter if the pin or the wick of the bar it's above the body or below the body. Any of these patterns is an entry for me. The only thing that matters is that these patterns appear after a pullback and not at the top of a movement. So you can see here, for example, there was a pin bar at the top of this movement. I wouldn't enter here when this peak was broken because there was not space to move and this was already rejection at the top, it would be more likely to make the price to come down. And you can see that it made just a small fake breakout of that previous high and it came to the moving averages again. But here we are on a different location, so it doesn't matter for me if the pin is at the top or at the bottom. I just wait for the break of that pin, of that wick, and that's where I can enter my trade. And what do I do next? I wait for the break of the previous high and then I try to close my trade somewhere here. I have several ways of closing my trades, but this is the basic scenario. And again, we have another pin bar here and actually two pin bars here that brought the price to the downside. And here is the thing, I don't like to trade against these big red candles. A lot of these big red candles that go against the trend, they often tend to make the price change the trend, or at least temporarily. So I wouldn't get in my trade exactly here. I would prefer for the price to go up again to test this zone where we had the big drop. And if we have a smooth pullback, this is where I would enter again. So we have this move to the upside. I see what happens here. And if we have a smooth pullback, I wait for the break of the candle that touched the moving averages. And again, I wait for the break of the previous high. And then I try to close it as high as possible. And then we have another example here. The price came to the 8 moving average, and when it started going up, when it was rejected by the 8 moving average, it was a good opportunity to trade. I would enter my trade there. I would wait for the break of the previous high. Here it didn't go immediately, but I would wait to get some decent profits and close my trade with some decent profits. I don't want to have a big risk and a small reward. I always wait for a decent profit, at least 1-to-1 risk reward, but the more I can get, the better. And I have several ways of closing my trades. Guys, and now we are here very close to the open of the US session. And when we are very close to the open of the US session, the price tends to start to slow down. Most of the traders are waiting for the open. I don't know what it's going to happen, but we just keep doing the same thing over and over. When the market opens, when the US market opens, I may go to the 2-minute time frame because it will have a lot of more volatility. The charts will be more clear, the patterns will be more clear, and we can make our trades much faster, and the candle will be much bigger. We can make more profits in a smaller amount of time. That's why I prefer to use the 2-minute time frame, and it's especially during the first hour of the open of the markets. But the strategy can be used on any time frame. If you like to trade on the 5-minute, you can trade on the 5-minute. If you prefer to trade on the 15-minute, you can trade on 15-minute. Sometimes the volatility is so high that can go even to the 1-minute time frame. If you want to learn more about this strategy, you have a link on the description of this video where you can get a free 6-day trading course. And if you found this video useful, please leave a like, subscribe to this channel and hit that alert notification so that you can be alerted every time that I release a new video. As always, trade safe and see you on the next one.